Mortgage rates have recently shot up, home sales continue their downward trend, yet at the same time, we're continuing to see house prices reach all-time highs. So what exactly is going on in today's housing market, and what can we expect to see in 2022? What's up, guys? It's James Allen, the Out-of-State Investor, and recently the housing market has been making some major moves. But before I get started on that and do a deep dive of what's going on in today's housing market, do me a favor, support the channel by smashing that like button, and if you haven't already done so, definitely subscribe and hit that notification bell to watch more content like this. And with that said, let's jump into it. Mortgage rates have shot up to the highest levels we've seen since the pandemic started in March of 2020. We saw mortgage rates shoot up from 3.2% to over 3.4% in just the last week alone, according to Freddie Mac. Now, it was only a year ago in January that we actually saw all-time lows in mortgage rates when we hit as low as just over 2.6% interest rates. So if you're looking at a 3.45% interest rate today, we're almost an entire percent from where we were just last January. Now, that might not sound like a huge difference, but if you couple that increase with the tremendous price growth we've seen of over 15% in the last year, you start to see a huge difference in your monthly payments. For instance, if you would have purchased a $400,000 house with 5% down last January, you would have been looking at a monthly payment of around $1,531 a month. Now today, factoring in the appreciation we've seen, that same house would cost you about $460,000, and factoring in higher mortgage rates today, you'd be looking at a total monthly payment of around $1,950 a month. So that's about an extra $420 a month for the same house just 1 year later. So what's changed since last year, and why are interest rates starting to shoot up all of a sudden? Well, the main reason for this has been inflation. You see, typically in the US, we see anywhere from 1 to 2% appreciation on an annual basis, which is actually a healthy amount for a growing economy. But recently, we've seen inflation rates spike to a point that we haven't seen in over 40 years. You see, inflation is reportedly up 7% in the last year, which is the highest levels we've seen since June of 1982. Well, the Federal Reserve has finally noticed this. They've admitted that we have a problem. They've admitted that inflation is no longer transitory, and because of this, they're finally starting to take action to combat inflation. But what many people don't realize is the Federal Reserve has been one of the biggest contributors to inflation in the first place. You see, when the pandemic started back in March of 2020, the Federal Reserve started purchasing $120 billion a month of treasury bonds and mortgage-backed securities. Now, these type of assets directly affect the mortgage rates, so by purchasing so much of them, they were able to artificially lower these mortgage rates to all-time lows, which then spurred on massive buying demand for home buyers. Now, at the time, we were experiencing all-time highs in house prices, but the affordability problem was counteracted with these all-time low interest rates, and in many cases, it actually made it more affordable than it was the previous year. Now, if you couple the bond purchases with the ongoing supply chain crisis and the fact that they printed over 20% of the entire US money supply in just 2020 alone, that's the reason why we're experiencing such massive inflation right now. So as of November, the Fed finally started tapering these bond purchases, and their plan is to stop it completely by March of 2022. So this is the very reason why we're seeing the 10-year Treasury shoot to almost 1.8%, why we're seeing mortgage rates shoot to the highest point in almost 2 years. Many economists understood that interest rates were likely to go up in 2022 based on what the Fed had already announced. But with that said, most economists did not expect to see interest rates go up this fast this early on. Well, even with these mortgage rates rising, demand has not seemed to slow down at all. In fact, many homeowners realize that mortgage rates are not very likely to go back down again, and because of that, mortgage applications are actually up over 1.4% just in the last week alone. In fact, Redfin chief economist Daryl Fairweather said that buyers are pouring into the home market right now because they want to get in before mortgage rates go up any further. Now, we did also see home sales dip over 10% in the last year and over 3.6% in the last month, but this is not due to a lack of demand. This is more of a lack of supply. We just have such a low inventory right now that naturally home sales will also go down because of that. So that is the biggest factor that's continuing to push house prices higher and higher, is this housing inventory shortage we're experiencing. You see, according to Redfin, as of December this last year, we hit a new low of just 1 month's supply on the market. Now, this has been an ongoing growing problem, as Realtor.com recently reported that we're currently experiencing a nationwide shortage of 5.2 million single-family homes. And unfortunately, this housing shortage doesn't seem to be getting any better, with millennials reaching their peak home buying years, with baby boomers not wanting to leave where they're at, and new construction is struggling to keep up with the demand, with ongoing lumber shortages and supply chain issues. New listings were also down over 13% year over year, as more people have growing concerns as to whether they can even find a house to move into after they sell their house. So this is exactly why I believe that house prices will continue to go up in 2022, because ultimately it comes down to supply and demand. That's the biggest factor in terms of if house prices go up or down. And with this housing shortage continuing to be a major problem, it's hard to see how prices will go down even with rising interest rates. But with that said, interest rates are off to a hot start, and because of that, I wouldn't be surprised to see interest rates go much higher than what economists originally predicted. I think 4% mortgage rates is looking more and more realistic for 2022, and if that happens and the interest rates continue to go up, then it's definitely going to start to slow down the growth of house prices. So you kind of have these two forces at play right now. On one hand, you have your housing supply, which is extra low, which is putting a lot of upward pressure on house prices. On the other hand, you have your interest rates, and that provides downward pressure. So it's going to be interesting to see how these two things play out this year. But with that said, I think the biggest X factor for 2022 will be lenders. You see, refinances are down to the lowest point we've seen since January of 2020, and a big reason for that has been rising mortgage rates. Now couple that with house prices going up, and you can see that a lot of people are going to be priced out of the market. So there's going to be a lot of business loss for these lenders. So the only thing they can do is try to get more creative, maybe loosen up their lending standards. So that's what I'm going to be looking for in 2022. What will lenders continue to do as far as their lending standards go? Will it become easier for self-employed individuals to maybe get in the housing market, those who work in the gig economy? So anyways, these are my thoughts on the housing market right now. I hope you guys enjoyed this video. I hope you gained some value, and if you did, do me a favor and smash that like button, and if you haven't already done so, definitely subscribe and hit that notification bell to watch more content like this. Finally, follow me on Instagram and TikTok at The Out of State Investor. Thanks again for watching, and I'll see you on the next one.